What's up, investors? It's Mike from MJF Invest. Today's video is going to be about Berkshire Grey. This is a robotics company. Chamatha led the pipe. Really exciting opportunity. Keep that in mind, though. The market is a little bit, unstable, if you will, or in a correction. So, if you're not going to look at this as a long-term opportunity, this may not be really for you. Because who knows, in the short term, things could go up, it could go down, whatever. But what I'm talking about here is a long-term opportunity. They have some really interesting prospects. We're going to go over the highlights. Before I get into that, please smash that like button. Early thumbs up really helps me out with the YouTube algorithm. Really trying to grow the channel on the road to 3,000 subscribers. So if you're new here, hit that subscribe button. But remember, I'm not a financial advisor. It's up to you to do all your own research. And you have to decide what stocks you want to buy and sell. Let's talk stocks down below in the comments section. During the week, Revolution Acceleration Acquisition Corporation soars on SPAC deal for robotics from Berkshire Grey. It's a SoftBank-backed AI robotics firm. Berkshire Grey agreed Wednesday to a SPAC merger with Revolution Acceleration Corporation, ticker symbol RAAC, that values the company at up to $2.7 billion. Berkshire Grey provides AI-based software and hardware solutions to automate warehouses and logistics fulfillment centers. Founder and CEO Tom Wagner formerly served as Chief Technology Officer at iRobot, which trades on the NASDAQ. The plans call the deal with a special purpose acquisition company to give Berkshire Grey up to $413 million in cash when the merger closes in Q2 of this year. Funding will come in combination with the SPAC funds and $165 million fully committed private PIPE investment in public equity, which is a PIPE investment. The PIPE backers include Social Capital founder and CEO Chamatha, along with Hito Sophia, and funds and accounts managed by BlackRock. So those are big-time investors. BlackRock and Chamatha are two of the companies that I really pay attention to, what they're doing. Especially Chamatha's vision. He's a visionary. BlackRock just is they manage the largest asset in the world. So you definitely want to pay attention to what they're doing as well. And that's nice to see in here. Also interesting fact, adding money already on hand, Berkshire expects to have zero debt and some $507 million in cash on its balance sheet once the deal closes. It looks good. So they're going to be in a pretty good cash position. In one moment, I'm going to get into the investor presentation and show you the things that I really were attracted to and found exciting about this company. And again, we're thinking long term. I can't make any guarantees to you in the short term. If the market is going to continue to correct and sell off, you're not willing to hold the bag here. This may not be a trade for you if you're looking for quick returns, right? But I could also see this having a lot of momentum too if the market stabilizes. So again, think of this as a long-term investment, and I'm going to show you why I like this company. First and foremost, what is Berkshire Grey? Their vision is they help retail, e-commerce, grocery, and package handling companies transform to compete, grow, and win in distribution. It's a $280 billion TAM. We talk about that a lot. That's definitely attractive. Always consider a growth stock's total addressable market. It's a really important metric when you're looking for growth stocks. And if the market is growing, if it's an emerging market and a growing company, that's certainly a recipe that can help you find some success. Warehouse operations are largely manual. The top three industry challenges are labor availability, increasing customer demands, and increasing competitive intensity. Operations need to scale and grow. And Amazon is setting a big standard. Keep that in mind. When these companies are especially in e-commerce, you gotta ask yourself, can you compare it to Amazon? And that's basically the standard that needs to be set for these companies. They need to get to compete. They need to bring it up. Now, part of me as a compassionate human being sees something like this and wonders, how much damage is this going to do, to people's lives? they're taking jobs away. Certainly they're going to need people to an extent, but how many more? That's certainly part of me is at least asking that. Now, I don't know. Maybe I'm totally wrong about that. Maybe this will add jobs. I know Jeff Bezos has said that in the past as well, but I don't know. But part of me at least is asking that question. But as an investor, I know that these companies are going to want to catch up to Amazon. And in Chamatha Palihapitiya's one-page thesis paper, which I'm going to switch to in 1 minute, he wrote that. Look at this right here. This is from Chamatha's one-page thesis. He said only 5% of warehouses are currently automated. 90% of picking is currently done manually. You know what I mean? And that's a big gap. So it's a lot of opportunities. This company also has some really interesting partnerships that I just want to point out. So keep this in mind. This is also from Chamatha's one-page thesis. He tweeted it out when he announced that he helped take this company public. So look right here. Berkshire Grey has significant penetration with anchor blue chip customers, including Walmart, Target, FedEx, and TJX. So, that's really attractive. And Walmart and Target are really gonna. Those are the two. They're trying to expand in their e-commerce area with each other, right? And with Amazon. So here's Berkshire Grey, and they have relationships with both clients already. So keep that in mind when we're going through the investor presentation. This isn't like a tiny little startup, like we're hoping and praying maybe this happens, maybe that happens. This is a company that's kind of leading the way, the market leader. They're already in there with Walmart and Target. So really positive sign, really makes me like this company. Berkshire Grey transforms warehouse operations. Comprehensive and coordinated AI-enabled robotics across the supply chain. And if you take a look at some of these things, they're really kind of cool looking. You see they're little kind of carts, and they have a box on top of them. Let me see if I can scroll. Oh, there we go. So as I scroll in, you take a look at these things. They're really cool looking. And, you think of the robotics and, I don't know what, sometimes I think we get a little bit, what exactly, it could be that simple. Look, and these are very cool machines. They're little. They pick manually, really fascinating. And they have an assortment of different hardware. Here's Revolution's investment thesis. I think this is very important. It says Revolution has identified Berkshire Grey as a unique and compelling opportunity to invest in and partner with. Berkshire Grey is a pure-play robotics company offering software-enabled full-spectrum automation solutions poised to become an industry leader due to its differentiated technology and strong traction with blue-chip customers. Category creator, a leading robotics company that fully integrates software, AI, hardware, and software solutions. Leading technology in terms of both its component parts and, more importantly, its unique integrated solutions. Large market opportunity benefiting from digital economy acceleration due to COVID and increased computing power. Strong projected growth story with the next 5 years and beyond, backed by its current 1.7 billion pipeline for blue chip anchor customers and new customers. So, this is gonna open the floodgates. And number 5 is the most important thing. And this is why because right now, up to this point, I'm like, wow, this looks pretty cool. But, how seriously can I take this? Like, what, you're gonna buy the robots one time? How much growth is that gonna represent? How many factories really can there be? But here we go right here. Now, this is really important. Number 5, attract this business model. It's an asset light with significant potential recurring and reoccurring revenue streams with robotics as a service, RAAS. That's like a subscription. Like you could lease these robots. That puts the company in a position to, it's not a one-time sale anymore. It's a customer that causes customer retention, because now that customer is paying on a monthly or annual or quarterly or annual basis. So that's really attractive to me. 6, it says Amazon and competition are driving e-commerce and companies to innovate, which is the truth. So these companies, to keep up with Amazon, are going to need to team up with companies like Berkshire Grey. So, and again, we touched on the growing TAM, $280 billion total addressable market. That's a huge opportunity, along with the fact that they present this recurring revenue stream with an asset-light model. It makes me really like it a lot. They also have accomplished leadership, board of directors and advisors, and early investors, and strong existing customers position Berkshire Grey well for the future and outsized growth. So again, consider positive signs right off the bat. We're talking Chamatha is leading the pipe. BlackRock's also involved. We're talking about a $280 billion TAM. And the fact that they're making a recurring revenue stream with robotics as a service, with the asset-light business model, I like it. I love this company. Definitely at the top of my watch list. If you're still watching, thank you so much. Please smash that like button. Subscribe for future content. Let me know what you think. Let's talk stocks down below in the comment section. Remember, though, I'm not a financial advisor. It's up to you what you want to buy and sell. I'm just a regular guy, but I do my DD, and I love making videos. Thank you for watching. Please come back.